Let's turn our attention to business now. President Bola Tinubu has again assured international investors that the money is safe within the borders of the country. The president disclosed this during a panel discussion titled Fostering Local Value Chains and Investment in Africa. The role of the German private sector at the G20 Compact with Africa Economic Conference in Berlin. The president highlighted to the investors that Nigeria has a large market and is ready to leverage all its advantages to become successful. The president noted that his administration is eager to partner with German companies such as Siemens in reforming the power sector of Nigeria. German Federal Chancellor Mr. Olaf Scholz expressed readiness, but with an acknowledgement of the need to resolve administrative and financial hurdles emanating from prior administration in the sector. Away from there now, the federal government lost an estimated $16 trillion to natural gas flaring in 10 years. The Energy Institute, a 72nd edition of the statistical review of the World Energy 2023, said the amount was lost from 2012 to 2020. A breakdown of the statistics shows that upstream and downstream oil and gas firms operating in the country fled the highest amount of gas in 2012, estimated at 12.9 billion cubic meters of natural gas, 9.2 billion cubic meters in 2013, 8.3 billion in 2014, and 7.5 billion cubic meters in 2015. The flood decreased as the year rolled by, with 7.2 billion cubic meters fled in 2016, rose to 7.5 billion cubic meters in 2017 before plummeting to 7.3 billion cubic meters in 2018 and then rose to 7.8 billion cubic meters in 2019. The menace dropped significantly to 7 billion cubic meters in 2020, dropping further to 6.5 billion cubic meters in 2021 before resting at 5.3 billion cubic meters in 2022. And in a bid to confront the persistent lack of professionalism and unethical practice within Nigeria's building industry, stakeholders and players in the sector converged on Lagos to chart a way forward for the industry. Details in this report.
The gathering brought together key representatives from the tiling subsector of the industry, construction engineers, the Council for the Regulation of Engineering in Nigeria, COREN, and other community of artisans to forge a common front against the challenges facing the growth of the industry, with emphasis on the need to promote competence and enhance the overall professional standards within the sector.
There is a law that has been signed giving power to COREN, that's Council for the Regulation of Engineering in Nigeria, which we are under them through Nigerian Association of Engineering Craftsmen, NAEC. NAEC was established under the Council for the Regulation of Engineering in Nigeria to oversee, to regulate, to monitor all the activities of craftsmen, artisans in Nigeria. If you are not a licensed tiler in Nigeria as of today, you will not be able to practice. And that has made us now, it will enable us to stop those menace in tiling industry.
Tiling is our member. If you are a plumber, you are a member. An electrician is our member. A mason is our member. All those involved with all the nitty-gritty that has to do with house upkeep. That is exactly what we do.
Some of the participants did not shy away from addressing the need for government intervention and the need to address the challenges facing the industry. Emphasizing the importance of supportive policies, the stakeholders stressed that such measures will not only bolster the industry but also ensure a higher standard of professionalism and ethical conduct.
The problem we are facing in the industry right now is that the non-professionals are the one getting the job, because when they are done, when they call us because of this, I have a connection, Godfatherism of it. They will not want to call the professionals to come and do it. They will call the non-professionals.
For a long time and even now, Nigerians import a lot of their tiles from outside the country. But increasingly, we are having people now investing in producing locally in Nigeria. But the challenge is the challenge of quality, because quality comes at a price.
Looking ahead, there is a need for collaborative effort between industry stakeholders and government entities that will bring about positive transformations in the building sector.
Let's take a look at some numbers in the equities market. Now, Asian shares climbed to fresh 2-month highs earlier today, boosted by a rally on Wall Street, where the dollar languished near its lowest in 2.5 months on expectations the U.S. Federal Reserve is likely done with interest rate hikes. MSCI's Broadex Index of Asia Pacific shares outside Japan was 0.91% higher. The index is up 7% for the month and on course for its biggest monthly gain since January. Japan's Nikkei eased by 0.15% after hitting highs not seen since 1990 yesterday. The index is up roughly 28% this year, making it the best performing stock market in Asia. China's blue chip CSI 300 index was 0.66% higher, while Hong Kong's Hang Seng index gained about 1.05% as easing U.S. Sino tensions lifted sentiment. Wall Street's 3 major stock averages rose, with about a NASDAQ of 1% rally leading the charge as heavyweight Microsoft hit a record high after it hired Sam Altman, who headed OpenAI until he was ousted late last week. Global inflationary forces are finally seeping into Japan's economy after decades of falling prices, forcing investors to radically rethink their Japan bet as the Bank of Japan considers a major policy shift. International investors who have long favored stock benefiting from Japan's aging population or a weakening yen are tearing up their playbooks to focus on expected higher interest rate, more generous dividends, and a revival in consumer spending. According to analysts, the policy switch has been slow in coming, but could herald an entirely new way of investing in Japan if a predicted long-term inflation rate of 2% in 2024 really happens. They said if the Bank of Japan puts interest rates above zero for the first time in years, banks' lending margins could rise. Microsoft emerged as the big winner of the upheaval at OpenAI, hiring ousted CEO Mr. Sam Altman and other key staff of the startup to avert a potential flight to rivals and helped deepen its lead in the artificial intelligence race. The crisis at OpenAI since Friday last had raised fears about the fallout of Microsoft, which has pumped in billions of dollars and uses the pioneer's technology for most of its AI offerings, such as its Copilot AI assistant. Analysts said the move ensure Mr. Altman will stay with Microsoft as the company competes with Alphabet-owned Google to dominate the promising industry. Microsoft shares rose as much as 2% to a record high before paring some of the gains, on track to add nearly $30 billion to its market value at current level. And crude oil futures fell earlier today, reversing steep gains made in the past 2 sessions as investors turned cautious ahead of a meeting of OPEC Plus this Sunday, when the producer group may discuss deepening supply cuts due to slowing global growth. U.S. West Texas Intermediate crude fell to sell at $77.34 per barrel with a downward price margin of 0.63%. Brent crude futures also experienced a downward price reveal of 0.64%, selling $81.79 per barrel. Bonnet Light recorded an upward price margin of 3.4%. to sell at $82.35 per barrel. And for the OPEC basket, crude oil dealers are offering $81.08 per barrel with a price decline of 1.39%.